We move now to the third lecture by. We're going to go now to the lecture by Mr. Michel Kamel, and we leave Michel Khazzaka to the end. Okay?
Do you have Luca? Do you have the slide? Hi. Good morning. First of all, thank you, Dr. Andary. Thank you, Dr. Azzana, for preparing this panel. It is here. My presentation will be about data science in financial services, and especially how banks are using analytics and machine learning to solve business problems. What is this picture? It is a land full of small pieces with no value, but contains very small pieces with a great value. And we have resources and machines to extract this value from this land. Why it is here? Because data mining is exactly the same process. Exactly the same process where we have a huge data, gigabytes of data, and we need to extract this very important information and helpful for business from it. It's very important to start the presentation with the evolution of data and analytics within banks and financial services, followed by some models and machine learning models that are currently used. And then the rest of the presentation will be about case studies within banks to solve some daily problems. Banks started in late 70s, where they stored their data on papers. All papers, each customer has one paper. Then the computer started, and we have the concept of data warehouse in late 90s, which is a huge concept when banks started collecting all data for all customers into one place, which is the base of BI and dashboarding to see trends, analyze customers, analyze the data, but only static data. And as we have seen yesterday with the availability of new hardware and processing power, we started doing the machine learning and predictive analytics on that data, which is the current status today. And tomorrow, in the coming days, we have the robot. Now we have Sophia, but in the coming years, I don't know when, and I don't think you know, but maybe Sophia will fall in love. It's not about love today of a robot, but we will talk about machine learning. Now, machine learning models is the process of amalgamating statistics with data and business all together to create value, which is the profile of a data scientist today. And how we do it and why we do it, we have a business objective and a business problem. To solve it, we need to go and extract the data that we need for this problem, fit a model on it using the latest technology, and predict from it when it is implemented in live IT systems to use by our customers and by employees. The main four models that we are currently using in Lebanon and the region, and cover maybe 95% of models used by banks, segmentation and clustering, and decision tree, and regression, and the neural network. To start with the decision tree, with the segmentation, the idea is to split our population into groups that have similar behavior. Those groups can be customers, can be parts of the institution, can be anything. Can be here the audience or any population. The second application is the regression, where you use it when you have many dependent variables and you need to predict one which is different, but you have some correlation. And those dependency can be linear or nonlinear, but you can use the regression analysis. The third one is the decision tree, which is an intuitive model, and you can understand it and explain it to anyone, especially to auditors and regulators, when they need to see your models that impact your profit and loss. And the last one, which is the most complicated one, is the neural network, which is replicating how neurons in our brain are working. And they are connected all together to process, and the more important one is to learn from experience. We learn from history, we learn from our experience, but computers learn from data. The machine learning is the brain of the computer. This is very complicated. We cannot use this in many cases due to the problem of explaining the model to regulators and auditors, but it's very powerful model, and we benchmark our models to this one. Now, going to case studies, starting with the application scorecard, a case of Turkish market, which is actually a case study in all Turkey and used by all banks. Any customer can apply for a loan from the website of the bank or by sending an SMS to the bank with his national number. Once we have that number, we have a system integrated with the KKB bureau data to get the data of that customer, around 400 information, on the same second. The batch file come back to the bank, so we have the data of bureau and the internal data if it is existing customer, all together to process it in a model. Previously, we have an expert model since we don't have enough historical data, and that model will give us a decision whether we accept or reject a customer according to the credit risk score. Having a good data, historical data, we can have a better model here. Instead of expert, we need to have a machine learning model. And in fact, we have several models here. One, it is a scorecard, which gives us the PD model. Another one is the income model, since a very good information about the customer is his ability to pay back the loan. So we need to estimate his income. Why we don't ask for income? Since this whole process needs to be done in less than 10 minutes. And we are receiving more thousands of applications each day. So we need a very fast, automated, with no human intervention to this whole process in less than 10 seconds. To do the model, we have around 4 million rows, means customers, and 700 columns, means information. For each customer, we have 700 information. To do the equation, we have SAS, analytical tool. We plug the data in it. We do several models, logistic regression, decision tree, neural network, random forest, and so on. Which one we choose? The one with the best performance in terms of predicting the credit risk of the customer. And especially in Turkey, we have built on top of the scorecard a decision tree, a huge one, to integrate information and data coming from the bureau that is not in the model, and this one. So each customer application at the beginning will go through one branch to predict the credit risk, and then either accept or reject the customer. Now, following the development of this model, after having an expert model, we have reduced the bad rate, means the bad customers, by 35%, assuming same approval rate. And this is the beauty of machine learning, where it helped us to decrease our bad customers and automate that process with no human intervention. Now, every machine learning model is built on historical data. To use it today, we are assuming that the model will process data coming from the same population as before. We cannot build a model, for example, Lebanon, apply it in Egypt. We need the same data, same population behavior to apply a new model. For that, we need to track our population and our model performance, and we have developed a SAS automated reports on a quarterly basis. We generated automatically on the population with all those graphs to test the stability and the usage of the model. Now, this is a full case study of model development. We have also in applications a behavioral scorecard, actually, across all countries. The concept is the same. We have data, we need to predict. But previous one is about application scorecard when the customer applies. Now, the customer is on board. He has a loan. We need to analyze his behavior with time for 3, 4, 5 years, I don't know, and track any change in behavior which lead to higher credit risk. For that, we collect the transaction data, the change in behavior between the customer and the bank, and we analyze it, and we develop a model to predict the credit risk on a monthly basis. So new customers have new scores on a monthly basis. To develop the model, it's the same approach. And we have that huge data also of bureau, and by bureau in Lebanon, I mean the CDR data, which is actually now being also updated in the future to have better data and better information about our customers. And one example of predictive characteristics is the age. Here you can see the trend of the age. The bigger the customer, the less the bad rate. The bad rate is decreasing. Then mid-50s, the trend being reversed and the upward trend due to higher probability of unemployment, of health problem, of death, and so on. Imagine more responsibilities and so on. Imagine this is one characteristic telling us one story. You have 600 characteristics, you have 600 stories. People cannot process 600, but what can process and who can process is the model, the machine learning model. He can aggregate all those information together to give us one information, one score, and one decision. Now, at the end of the process, credit cycle comes the collection. For those delinquent applications and customers, we need to collect money from them, call them for a meeting, for a legal problem, and so on. For that also, we have developed a collection scorecard that predicts who will pay back the money and who not. Since you may have some customers that forget to pay or they are abroad and so on. So you don't want to put effort on them. And based on the score, we can divide our delinquent customer into those with low probability of not paying. So maybe only sending them an SMS, they will pay. And those with an average, you can call them or meet with them. And those with a high probability directly go to legal action since they will not pay and don't lose time. This is another very important application of a model development for cost efficiency of collecting money. Now, on a yearly basis, the bank set sales target for branches for the next coming years. Usually, business do it judgmentally, without any hint, and some branches achieve more and some branches achieve less. So the idea here is to segment our branches into different groups that have similar behavior in terms of number of employees, market share, asset liabilities, and so on, and gives them a target which is fair to achieve at the end of the year. For that, we have used K-means and hierarchical clustering. And this graph shows by assets and liabilities the different clusters. We can see an overlap since here we are looking at a 2D dimension. But when looking at 6D and 7D, this overlap is no longer available. This is by number of employees, and this is by penetration and assets. So moving faster, in attrition scorecard, any institution have this problem of attrition of customers. And we need to develop a prediction model to know which customers will leave the bank, to try to retain them and give them special offers, special treatment, and so on. For that also, we need to collect 360-degree behavioral data to know which customers will leave, such as number of products, number of transactions with branches, customer loyalty, problems from the call center, and so on. When it comes to anti-money laundering, we have huge lists and databases to check it for each customer. Also, we use a big data analytics engine to collect and analyze this data. And it's very important to understand the flow of transaction between accounts to see if there is any concentration into one or more accounts which should be more investigated. And last case using internal data is about the ATM cash optimization across the whole country. Since in Lebanon, we have more than 200 ATMs, and usually they are full of cash each day, but effectively, no ATM will need them. So customers, for example, in the first day and second day of the month, they will withdraw a lot of money. But starting 15 and 20 of the months, the amount is very small. So having an operational risk of putting the money on these ATMs across the whole Lebanon, need to optimize a model and predict the amount of money needed in each ATM. And in that case, you will have less money, so more of your liquidity to use it. Last application about non-bank data. All of them previously using internal data. Now our customers can interact with the bank through Twitter, for example, social media, and ask for something from the bank, have a problem with the bank, and so on. We have developed a Python sentiment analysis engine that is linked directly online with Twitter, analyzing all tweets and predicting the sentiment of each one where Bank Audi is mentioned. And it gives us a positive tweets, neutral tweets, and negative tweets. And we can concentrate on negative ones to have a better customer experience. This is the last one. Now, ending by our challenges last years and developing those models. The first one, and any institution should, when going to any analytics initiative, is proper data governance. This is the key, this is the issue. Without data, you cannot do anything. With the data and the data quality, you can do a very interesting work in machine learning. And another one is the data scientist, lack of resources. And I am glad to hear that nowadays universities and here the AUB are working on this. And the last one is having a buy-in from top management to understand the added value of all of this work. Thank you.
Thank you, Mr. Kamel. You discussed machine learning models, the process of building models to help computers learn from data. You gave examples of these models, the clustering and segmentation, regressions, decision tree, and neural networking. And you also provided some case studies predicting credit risk of customers